but I won't do it. All right. I'm still not feeling that good. So let's just do a revision on on inducements and engineer liquidity again for some people that are confused. Then tomorrow we'll go into POI selection. So tonight, let's do liquidity and inducement and inducement and engineer liquidity again. For some of you that did not actually get it the first time, so you will get it now. It is a very important topic. So I really want every single one of you to understand. So if you were not paying attention during the first class, that is the last one we treated it, please pay what? Pay attention now. POI selection will be tomorrow. It's tomorrow we are supposed to have our next class. This one is to cover up for yesterday when I was feeling down. All right. So inducement slash engineered liquidity 2. The last class has been uploaded. Somebody said feeling down and in profits. That's the good thing about trading. You might be sick, but as long as you can take up your phone and press, you can still take up your phone, bend it, check charts, take your trades. I hardly even use this my setup for trading. I mostly use my phone to analyze and everything. Most of the trades you see online, it's my phone. That's why when some of you are like, I don't have money for laptop or something, I will just laugh because you are telling me you don't have money for laptop to trade. You that you are telling me I'm still using my phone. Doesn't matter if I have all the systems or whatever. I'm still using my phone to trade. So it is not even about the device you are using, right? The point is you should know what you are looking for. So don't blame the device. It's you yourself. All right. It's stress, Jerry. I'm not feeling that good. Myself, I know. It's stress. I've been doing some works offline, so driving to and fro, traffic and all. It's really stressful. I can't really trust somebody to actually drive me, which is why I mostly drive myself. If they want to drive, they should use their own car. So, inducement and engineered liquidity. Yeah, I'll be resting. I've been resting since yesterday anyway. So, throughout today, just more rest, reduce screen time and all. So, inducement and engineered liquidity. I said inducements means trap, right? This trap now means before you actually start looking for this pattern, let's say we have this breaker block here. Price was supposed to sell from here, then price invalidated it. Then we have something like this. Now, this is the breaker block. It can also act as what? Support. So it's just like breakout and retest, right? Now, these people, they know that they know that a lot of people wants to buy from this point, but they need liquidity. And that liquidity now is your stop loss. So if everybody is buying from here, everybody is going to be in profits. The liquidity is no longer there. So they need to stop people out before they move, which is why they engineer something like this. They now bring out this kind of low that will break structure. On a normal day, when you see something like this is now where you are going to buy from. This is the trap. I made mention of this thing when I said a trap or an inducement must be a zone that when you look at it, you'll be like, damn, I want to buy from here. Logically, you will look at it Let's say you've not attended this class before, you've been trading traditional SMC. You open your chart, you see this other block, last bearish candle. That is where I want to buy from. Without no form of liquidity or whatever. That is the trap. So I said an inducement is simply an internal range liquidity that is close to a point of interest. Now, let's say we are using this last low. So we have like this rally, we have base here, then we have another rally. This is an internal range liquidity. This is the low that led to this break of structure, but this is an internal range liquidity. It is inside this range, right? This is the range. We have this low, we have this high right here. Sorry, excuse me. So we have this low and we have this high, right? So inside here now is our trading range. Just like the question one guy asked me in the class today was like, looking at this, where should he mark his structure? He was marking this one from this high to this low. He was still marking from this low to this high. Understand this. The first thing before you even apply inducement, before you apply trading range, before you apply liquidity, the first thing you want to do when you enter the chart is market structure, because that market structure is going to help you identify the direction of the markets. Before you are going to go, let's say there's a two-way lane and you are going right. You can't be stopping a bus at the opposite side of the road because you want to go right and you're expecting them to turn because of you. No, you have to cross the road and stand in that direction where you are going to and stop bus that is going to that your direction. Same thing with trading. You will not just come out and be like, okay, this is bullish. Let me start looking for bearish entries. No. Before you enter a trade, because you want to long or short, you want to move, right? Trade and the chart is either going up or going down. So you want to either go up or go down. And you cannot just jump and be like, you are going down, market must go down with you. How much do you have? Your small 10,000, 20,000, even $100,000 cannot move that market. Right? So since it cannot move the market, the real question now is, what do you do? It's simple. You follow the trend. Market structure now helps you identify the direction of the market. So when you open your chart, the first thing you want to do is, where is price trending towards? That is, where is the recent multiple breaker structure? Then you open your charts and you are seeing that it is breaking structure to the upside. Fine, market is bullish. Then what do you need to do? Identify the last swing low and swing high. You identify, that's your trading range. Then you now want to work with that trading range. Simple. It is not too complicated. It is the fact that most people try to like complicate it. That is where issues comes in. You identify the trend, identify the last swing high and low. That is where you now want to work with. That becomes what? That becomes your trading range. Now we are saying forms of we are not saying inducements or liquidity. We are not saying an inducement is an internal range liquidity that is close to a point of interest. Now let's say you are trading supply and demand. We have this drop here becomes the base and this rally. So let's just use this point now as our demand zone. This area now as our demand zone, right? Many people want to buy from here. But the attribute of an inducement is what? An inducement is an internal range liquidity, and it must be close to a point of interest. This is an internal range liquidity that is close to this point of interest. That is one. An inducement must do what? Must break structure. This inducement led to this break of structure here. What else are you looking for again? An inducement likely must have a fair value gap. It must be a two clean POI. A two clean POI now is mostly like another block with a fair value gap, no inducement, nothing at all. This other block right here, look at it, no single inducement, nothing, just other block with a fair value gap. This is a two clean POI. This has given us what? Three things we are looking for in an inducement. That is likely a trap. Because when price comes here, price needs to do what? Take it out. Because everybody, most uninformed traders are buying from this point. And if you are buying from this point, where is your stop loss? It is below here. And that is the liquidity you are looking for. Inducement is also a form of liquidity. but it is an internal range liquidity that is close to what? To a point of interest. Every inducement is a liquidity, but not every liquidity is an inducement. Some liquidity are just there to move price. Some liquidity are just there to drop price, while some liquidity are there to trap traders. This is one of its inducements. This is the type of liquidity that we see on the charts that traps traders. The goal of this inducement here is to trap you, take your money, and still go in your direction to now frustrate you. It will stop you. It will first trap you, entice you, give you small profits. After that, it is going to do what? Take your money. After taking your money, it will still go in your direction, most likely. So understanding inducement is like understanding how the institutions thinks, because they create this thing for uninformed traders. Sometimes we do fall traps, we do fall in their traps. Yeah, it is possible. It is not a it's definitely it can happen, right? Sometimes I do fall for inducements, sometimes even till now, sometimes, yeah. But when you keep spending more time on the charts, the more you spend, the more you understand. Something about trading is that you will never stop learning. Never. The moment you become good and you are now profitable, trust me, that is even when your trading starts. Because every time when you open the chart, you discover new things. There are some things now that I'm teaching in this class that is not in Nikhil 1.0. Why? Because I discovered them late 2024. New things on the charts that I'm adding to this class now that I did not even know before. And it is what related to whatever I'm teaching, whatever I'm using. That is what we call refining your edge. The more you study, the more you discover new things. The other day, I was just looking at FVG as a form of inducement, and it was shocked that it happened. The whole FVG became an inducement. That one is when we are done with all these things. I'll show you guys. It is something new. I never knew about it. Nobody actually knew about it. I was just studying and I found it. These are the things that some of these guys now will just do, then craft a name around it and call it their strategy and be like, so person strategy, so person concept. I don't have time to start naming something after my own name. I'll just teach you if you like learn. My own goal here is to make money, not to be known. I don't want to be known as the greatest mentor. Yes, I want to impact lives. Yeah. Bring in a lot of traders that will end up becoming financially free as well, and bring and them too, they will bring in traders and train them too. Yeah, I want to leave that kind of legacy. But above all, I want to be known as one of the best traders in the entire world. That is the first goal. Before they call me one of the best mentors, call me one of the best traders. So understanding inducement is like thinking like the institutions. They know that most people want to buy from here. And that is why traps like this, they all have some things in common. They are very, very close to the actual POI. Most of them don't have inducement. They just leave something like another block and fair value gap. And most of them always lead toward a break of structure. Look at these EU charts. Although I used confirmation entry, but something was clear. We have a break of structure here, right? We have a break of structure here. And I said something. The inducement must be close to the POI. Then we have drop, this base, this rally. So I'm looking at this area here, this one here for my entry. Why? Because there's a fair value gap here for price to fill. So I'm looking that price will likely come here to fill this gap. And from there, trigger my entry. So this will close for it to be an inducement. It was not close to this entry. And since it was not close to this entry, the first thing on my mind is this is a two claim POI. And what will happen? Price will likely sweep the POI, that is like take the POI out first before doing what? Before coming back. Right? In some cases, if price will engineer liquidity, still take the POI out. Sometimes. So in this case, I was looking for price to do what? Take out this POI first before coming back. And if price is not going to take the POI out, I need price to engineer liquidity. Now, what is engineer liquidity? Engineer liquidity is actually another type of inducement that is engineered around POIs without inducement. So if a POI does not have an inducement, something like this, very, very plain, expect price to create an illusion that looks like what? That looks like price wants to buy. That illusion is the engineer liquidity. So expect price to create its own inducement. In this case, it's going to be in form of this. Price is going to, after the break of structure, price is going to come down close to that point of interest. Sometimes it will tap it, sometimes it will not tap it. Yeah. Then pull back. This is how traders now think. Let's say you don't know about inducement, yeah? Or let's say you even know about inducement. And in this case, you want to buy from here. You want to buy from here. Then you see price stop somewhere here and start pulling back. The first thing on traders' mind will be, Omo, I've missed sorry. Just give me a moment, please. Okay. The first thing on your mind is, Omo, I've missed entry. Price is already leaving me. So what are they going to do? You see all of them, they will start jumping. They will start market order, everybody will start buying. They'll start buying here. Right? That is number one. What is happening? Once they are buying their stop loss, they'll be placing their stop loss below this slope. That is one. Number two, the other type of traders, all these things are happening inside this particular move right now. Now, price might actually even still do something like this, pull back. All these ones that have already for more the first time, they'll be like, yes, we are in good profits, right? Why those that did not for more, after they've seen this pullback, what would they do? They will likely want to do what? They will likely want to buy from here. They'll be like, yes, that's the confirmation entry. Where are they placing their stop loss? They are placing their stop loss below here. You can see now, the goal of an inducement is to trap traders, lure them into buying early, right? That's the goal of this inducement here. What has this done? It has lured traders in. Most of them are already in the market. They've placed their stop loss very, very well. The liquidity that this POI does not have before, it is now present. What will price now do? Price will now come back, take everybody out. Now tap into that POI before and move. This is what we call engineered liquidity. Since there is no liquidity here, and price cannot afford to sweep this low, because if there's no liquidity, price will likely do what? Take out the low. But if this low is resting around a strong level and price cannot afford to take it, because maybe it might decide to take it and reclaim, but the moment it takes it, most buyers are in loss. You see some of them panic and take out their money, and instead the entire pair is now going to do what? Is now going to lose its balance and start selling rapidly. So if they see that this is around a strong point and they can't afford to sweep it first, they will just engineer liquidity like this. Lure traders into thinking what? They are buying already and it's missed entry. Most of them will not do what? They will not buy here. Some people buy here, some will still buy here. And amongst everything, what has happened? They are top loss here, stop loss here. Price will take them all out and buy engineered liquidity, which is what happened on this EU. Since there was no inducement here, I was expecting price to do what? I was expecting price to engineer this liquidity. Then what happened? You see price tapped here. The fact that you are seeing these long candles going up back, it means people are buying. They thought that what? They thought that price has already gone. So FOMO has happened. After that one, what happened again? It consolidated, then finally gave us this break of structure. So where will people buy from again? You can see them, they are buying from here already as we speak. They're already buying from here. Other block. Who told you what the other block is going to hold? It's 2025. You cannot be trading from every single other block you see. You'll be like, hey, other block, this is where we'll buy from. Just like that. Then what happened? Where are they going to place their stop loss? They'll place their stop loss below here. Those that are for more here will place their stop loss below here. Enough liquidity for price to take. Then what did you see price? The price came back down, boom, take them all out before moving. It happens every single time. This was the first entry. Okay, oh, some people were complaining on Telegram. They were in my DM saying, we need re-entry. We missed the first buy. Fine, good. I gave them the second one. Look at another one again. When price got here, we had what? We had this break, this change of character here. What does this change of character tells us? Let me go to the comment section. What does this change of character mean? Type it in the comment section. Let me see. This change of character here, this particular one, what does it mean? This is a price is coming from a downtrend. Then this change of character happened. So what does it mean? Thank you very much. It means we are changing from this downward trend to this upward trend. Very good. Nice. Exactly. Perfect. And this change of character here now is telling us that, yes, so this engineer liquidity price has taken it. Yes. Now we want to buy. This was the last high that gave us this low. Price took it as well. Right? Good. So since price has taken it, that is a change of character, telling us that what buyers are coming in place. Since buyers are coming in, what do we have? We have this nice looking area, this nice looking base here, right? Then price pulled back down, give us this low, engineer liquidity went back up. Why did price come back again to take out this low? Engineer liquidity, that is one. Why is this low an obvious area for price to actually take? Because this low could not give us a new high. So price needed to come back and take out this low before it keeps moving. So price came back down, took out the low, and continued moving upward. Why did I mark this high? Based on this particular structure, this is the target first. Based on this particular structure here, this is the first target. If this price does not get to this target, even if this trade has given me some thousands of dollars, it is a bad trade. I'm not really looking at the numbers. Yeah, I'm looking at the structure, the direction, and everything. It's only on the charts. I'm going to be looking at the charts to be doing what? This is how you can actually maintain your psychology to be able to hold trades. If I go to my trading accounts now, some accounts on this particular trade, some accounts is already giving me $3,000, some is giving me 2,000, some is even giving me like $4,000. And if I focus on those accounts, I will be moved by this. I won't be, that is not trading, that is me looking at money, being moved by money. Yeah. But when I focus on these charts and I apply a technical approach to trading, applying a technical approach to trading means since you already have a plan, you stick to the plan. Now, the plan on this trade is since we have this change of character here, this re-entry, the first area for me to want to take partials from, or for me to even call this trade at all a good one, is for price to take out this high and give me a new high. So that is where I'm looking at. So when price takes out this high, that is now when I will now go to my trading accounts to now look for some profits that I want to take. It is already at the high, but it has not taken it. And the idea is that price has to take out this high. Then the other accounts where I risked bigger, the idea there is for price to take out this entire one. So they are like different ideas to them. It's just a basic market structure. We have low, we have high. Low, we should be having a new high, right? That's the idea. So until we have a new high, that's when I'll not start. That's when I'll not decide to take profit as I want. So understand how inducement actually trick traders into thinking a particular entry area is actually valid, only for them to get what to get trapped. Look at this. There should be more. Let me check. Hmm. This is another one. Yeah. In this case, this area looks good for entry, yeah. This particular area looks good for entry, but it's also an internal structure. Although it's inside the discount level, price can actually decide to respect it, but it is also an internal structure. I'm looking at this point and not this point, right? But look at this inducement here. This is the low that led to this high. This is an engineered liquidity. So here we have some sort of break of structure for you to understand why price took out this low, right? We have a break of structure, then we have this high. This was the main break. Oh. Please don't forget. This was the high that price took out, right? So we know this. So in that case, this is the low. Then this in this case, this is the low, and this is the high, right? So we said an inducement is an internal range liquidity that is close to a point of interest. So this place can actually go for a point of interest. Reasons, it's actually a POI that swap liquidity and it is unmitigated, blah blah blah. This place can also go for what a POI. But why did price take out this low? It's a too clean POI. You can see the other block, you can see the fair value gap, you can see it broke structure. This is an area many people wanted to buy from here. Many people wanted to buy from here. But it is an internal range structure. It is an internal range liquidity. And it is close to this particular point of interest that I'm considering as a very good one. So price took it out. So this is the inducement. This one right here is the inducement in this particular case, if you are to use this POI. But for me, I'm actually using this entire POI here. This is the POI I'm using. Why? This is more like um the kind of chain I trade. Yeah. I'll be looking at this area because it's actually swept liquidity. It's in a very nice base. And this is also an internal low. The fact that it is looking very, very fancy for traders to actually take is why I still feel like price is going to take it. But it does not have one thing. What is that? It is not clean, right? It's a very nice valid POI for this one. This is a too clean POI, but this one is not. This one is not clean. But inducement logically is an area that wants to make you enter what a trade. So for me to actually take this POI, I did not mark it, but I'm also watching it. For me to actually take this POI, I need a confirmation, just like what I have on EU. That same thing I have on EU, I want to see it here. That is where's my part two? That same thing I have on EU, I want to see price do something like that, right? Something like this, and give me that nice change of character, pull back and move. That is only when I'm going to take this trade. If not, I won't be taking it here. But I'm not talking about the trade, I'm talking about this inducement. So focus on this inducement, please. You see how price took out this inducement? Here, this is what we call an inducement. It looks like a very nice area. Some people will be like, is break of structure one, break of structure here two. So people that just understand only market structure, they'll be like, from here to here is my swing. Price has pulled back into discount and break structure to the upside. So I'm working with here to here. You see, understand structure properly. This is an internal structure. This is an internal structure as well. This is the major structure, and this is what led to the break of structure here. So this right here, internal range liquidity, internal range as well. Let me look at one more example of inducements. Okay, who is seeing this breakout on our trend line traders? I marked this earlier. This is a very nice entry. Price do here. Nice trend line breakout and retest. So we might see price dump into this area again. This one is for trend line traders anyway. I'll risk a little on it. What pair is this again? AUDNZD. Okay. So one more example on inducements. Then we'll call it a night. This screen time is killing my eyes. Hmm. This right here was an engineer liquidity. I actually um this was on a live session with one private student like that. Here I was looking at this. This is a rally, this is a base, this is a drop, and price invalidated it. So I marked this entire area and I told him we are buying. But price needs to do what? Price needs to engineer liquidity. We cannot just buy like that, right? And what did we see price do? We saw price pulled back, went back up, leading to this break of structure here. Naturally, everybody wants to buy from these points. They call it continuation. This other block here, that they'll continue going up. And where would they place their stop loss? Just below here. It has served as what? An engineer liquidity for this base here. And price did what took them out before buying. As easy as it is. Just like that. Look at this other good trade here. This good sell. This sell. Inducements to clean POI. Let's say we are using this particular entry now. And we have this breakout structure, for instance. This is another entry. Look at this other block. SMC. Last bullish candle before the bearish breakout structure. That is other block. And what did you see? Fair value gap, no move. This is the trap. And what did you see price do? See price took them out before selling. Easy. Look at it. And where is it? This is an internal range liquidity close to what? Close to this POI. One more. The one, where is that structure that led to this current gold by now? The funny thing is I have all these things in my head. Looking at the chart, I can even be picturing the chart in my head. I can be just be like this, picture the chart in my head because I've already studied most of them multiple times. Now, this is the last move that led to this break here. This was the breakout structure. Last bearish candle before the breakout structure. People call it other block here. This was the POI. What did you see price do? Price took it out first before doing what? Before going their way. Simple. This is its simple structure. I'm going to a new high as it is. I'm pretty sure this is affecting my eyes, Jerry. I've already gotten what's it called? For engineer liquidity, make sure you find that engineer liquidity on that same time frame. All right. It is very important that it has to be on that time frame. Because when you go down to the lower time frame, you might be getting details. Some of them might be noise, right? But make sure the engineer liquidity, you are getting it on that particular time frame. It is important. That time frame where you are getting your entry for. So that's going to be all for tonight. I'll be seeing you guys tomorrow, where we talk about point of interest selection, POI selection. Now we are coming into the most interesting part of this class now. Everything we've been doing since is something that can actually be done easily. Yeah. Something that can actually be done easily. What do I mean by that? It means you can type all these things. Engineer liquidity, it's already on my YouTube. Inducements, I'm pretty sure there are some people that have made videos on that before, right? So, although they might not explain it the way I'm going to explain it, because not everybody is the same, right? But then we are getting into the most interesting part of the class, which is putting everything all together. It's not going to be easy from, even if it has been easy for some people in the past, it's not going to be easy from now. Putting everything together is when you'll be seeing us with crypto sessions, synthetic sessions, forex sessions. We can just wake up and anyone that we feel like trading on, that's the one we are going to trade on. Yeah. We'll put everything all together. We'll start doing weekly reviews and start looking into trades and everything, putting it all together. Very, very important. But before that, when we complete the class, we've not completed the class, so there is still about some sessions left before we can now start the mentorship. Class and mentorship is not the same thing. All right. So after this, we move into what is it called? After this, we'll move into the next phase. So tomorrow I'll be seeing you guys POI selection. Don't miss the class or anything. It's very important to understand the point of interest you want to do, what you want to be trading from. Because that's how we'll be putting both inducement and engineer liquidity together. So I'll see you guys tomorrow. Have a nice night.